Hello and welcome to this week's market update. Today is 15th of April 2023. So we'll start off with a recap of what happened this week, and then we'll talk about what we can expect next week and beyond. So you're looking at a chart of S&P 500, the price action over the week. You can see that it gapped down on Monday. It fell right to the weekly S1. So the green line is the weekly S1 level. And then it recovered moving through the weekly pivot, which is this blue line right here. And then it rose close to the weekly S1, then fell back to the weekly pivot and then rallied. So this rally was basically after the CPI report. So we got the CPI report this week where headline inflation fell from 6% at the end of February to 5% at the end of March, which was positive. So the market kind of rallied. And then on Wednesday, we got the minutes from the last FOMC minute. And then market fell because in the minutes, the Federal Reserve used the word recession a number of times, which kind of scared the market. So the market fell. And then on Thursday, the PPI came in, inflation at the producers level, which showed a big drop in inflation, and then the market rallied. And then early Friday, there was some weakness, but the S&P 500 managed to finish strong towards the end. Overall, it finished with a modest gain. So this was the previous close, and this is this week's close. But a lot of chop in the middle as market was reacting to the CPI, the FOMC, then the PPI, and all of that. And then in between, we had the bank earnings. If we look at the NASDAQ, you'll see that NASDAQ also had a very volatile week. It gapped down, fell to weekly S1, rallied to the weekly central pivot range, pulled back, rallied again to a weekly central pivot range, which acted as a resistance. So this was a resistance, fell back to weekly S1, found support, rallied, fell back to S1, and this black line is the weekly last week's low, and then big rally after the CPI, the PPI. Cleared the resistance at the central pivot range, and then fell back to the central pivot range after this big rally, but managed to finish show some strength towards the end. NASDAQ also managed to eke out a small gain. Now coming back to the daily chart, you can see that overall there was no change in the daily pattern. You see the sequence of, this is S&P 500, the sequence of lower highs remains and higher highs. So there was no change in the weekly pattern. If you look at the moving averages, where price is in relation to the moving averages, you can see that the price remains above all of the moving averages, the 200-day moving average, the daily 20, the daily 50. So that is positive. You can see the momentum indicators are also positive. MACD is above the zero line, RSI above the 50 level. So both the price action and momentum indicators are positive on a daily basis. You can see that S&P 500 is beginning to now kind of consolidate after this big move to the upside. I think this consolidation is kind of healthy. When market rallies, it just doesn't rally forever on a straight line. You can see rally, some pullback, rally, some pullback. So that's exactly what we're seeing right now. Even if we look at NASDAQ, you can see that NASDAQ also has a strong looking pattern at the moment. You can see that sequence of higher lows is continues. You can see that price remains above the 200-day, the daily 20, daily 50. You can also see some consolidation above the moving averages, which is quite healthy. If you look at Dow was one of the strong performers this week. You can see that since forming this low right here, Dow continues to move higher. It's now above all of the moving averages, the 20, the daily, the 200, the daily 20 and 50. The daily 20 and 50, they've started to cross and moving higher. So Dow is also looking positive. Momentum indicators are also positive. The only one which doesn't look all that strong would be the Russell 2000, the small cap. So if I just remove the moving average, you can see that Russell 2000, after this big decline, it's going sideways. It hasn't been able to clear this previous high. And right now it's been kind of consolidating between these two zones. So this is around 1815 and this is around 1747. So whichever direction it breaks, that's the direction I would expect it to move. If it breaks to the upside, then I would expect it to move up to this level. This is the only one which, the technical picture is not all that great. Even if you look at the momentum indicators, RSI is struggling to clear the 50 level. MACD remains below the zero line. So this is the only one which is showing some weakness. So coming back to S&P 500, so given all of that, so what can we expect from S&P 500? Now, see, the key economic reports are out. The CPI has been released, the PPI has been released, retail sales came out on Friday. So all of those are behind us. What's going to happen is over the next 2 to 3 weeks, we're going to get earnings. On Friday, we saw a number of banks reported earnings, which were above expectation. And they also confirmed that the problem that happened in the banking sector was limited to a handful of banks. There doesn't seem to be a contagion. There doesn't seem to be any concern about a credit crunch at this point. In fact, CEO of BlackRock said that he does not expect a recession in 2023. Some of the banks also mentioned that they're not seeing some recessionary concerns at this point. And net effect of that was we saw a pickup in bond yields. So let's quickly have a look at bond yields and then come back to S&P 500. So where are the bond yields? Here, 2-year bond yield rose 13 basis points. Now you can see right here the big green candle. The reason why it rose is because, one, the bank earnings showed us that the bank problem is not likely to be widespread, at least for the time being. And they also suggested that there doesn't seem to be any sort of concern over recession, and so the bond yields picked up. Market is now expecting Federal Reserve to increase Fed funds rate by 25 basis points at the next FOMC meeting in May. So I think given all of that, there is an opportunity for bond yields to pick up a little bit. So I definitely think that the 2-year bond yield can move up to this level right here around 420. The question is whether or not it can take out this level. You can see that the bond yields have been making a higher lows right here, since this was the big drop after when the banking crisis started, and then markets sort of stabilized. And then when the earnings started to come out on Friday, you see that there was a big move up. And then early next week, we're going to see more earnings from banks, Goldman Sachs, Bank of America, and all of those companies. And that would provide some more guidance as to, whether or not we're likely to see any kind of a problem in the financial sector. If not, then I would definitely think that the bond yields can go up more. If you look at the 10-year was up 7 basis points, and you can see that it started to move higher. So the strength in bond yields basically meant that Dollar was, dollar found some support. You can see that dollar has been very weak, recently. So, but at least on Friday, it found some support. That basically means that I would expect some weakness in gold, and gold was down almost 2%. So there's a little bit more weakness, I think, in gold. Now, given all of that, and coming back to S&P 500, I think there is an opportunity for S&P 500 and NASDAQ, both of them, to consolidate, go sideways a little bit. I say that is because, we've got earnings coming out, and I'm not sure that investors want to push market higher ahead of those earnings. They would want to see at least what the earnings look like. More importantly, they want to see what the outlook is going forward, because we all know that earnings this quarter is not going to be spectacular compared to a year ago level. But I think what investors would want to know is what the outlook is, say, for the next quarter or the quarter after that. I think that's that's basically what the investors want to know, and based on that, they would make a decision whether to push the markets higher or lower. If I also look at the positioning of the sectors, the SPY ETF is made up of 11 sectors. So if I look at how those sectors are positioning, that usually gives me some clue as to what to expect. So if I look at the largest sector, so this is the largest sector, XLK. Obviously this is the chart looks strong. You can see it's moving up, it's consolidating. You might say this looks like a bull flag consolidation. That's fine. But I think there is an opportunity for this consolidation to continue for a little bit longer. Only because when I look at the largest stocks in the technology space, so let's look at Apple, for example. This is Apple. There's the chart looks strong. There's no question about it. But what is concerning me is the fact that you can see that the moving averages are going higher. It remains above the moving averages. It found support at the 20-day moving average, all of that. But the gap between these two moving averages is beginning to widen. So normally when I see the gap widen, usually I see that there is an adjustment and the gaps typically narrow. You can see right here, when the gap started to widen, there was a correction and the gap narrowed. Even on the downside, when the price was moving lower, you can see that the gap started to widen between the daily 20 and 50. And what happened is that there was an adjustment, correction, and the gap narrowed. If I go to the left, also right here, you can see that the gap widened. There was a correction. Even on the way up right here, the gap widened, and then there was a correction. So when I look at Apple, I see an opportunity for some consolidation. The question is whether Apple is going to be able to take out this high. So given the fact that it has had a good run up, it needs a little bit of maybe sideways action, especially ahead of earnings. That could put a lid on, let's say, the tech sector, especially if Apple is not able to clear this and if we see more sideways action. Another one that I'm watching is Microsoft. If you look at Microsoft, this is another heavyweight. So you can see that it also has a very strong, looking price action. Moving averages are going up. Again, you can see that the gap between the two moving averages is widening. So that tells me that we could see more price action, more sideways action on Microsoft, especially ahead of its earnings. I'm not sure that the investors would want to push Microsoft higher. And if it goes sideways, I think that would be healthy, and that basically provides an opportunity for this gap to narrow. If you look at NVIDIA, again, NVIDIA has something similar, very strong run up. So you can see that it started to kind of consolidate, forming a lower high. I think there's an opportunity for some pullback in NVIDIA, or at least slow down and go sideways. I'm not saying it's going to crash and burn, but I think it's maybe go sideways. You can see MACD started to move lower. if you look at Meta, I mean, just this thing just keeps on going. It doesn't want to stop. So when I look at some of these tech stock, I see an opportunity for maybe to slow down a little bit, and that basically means that XLK probably I would expect some sideways action in XLK. This is the heavy. I'm not saying that this is gonna fall dramatically, but I think it can go sideways. If you look at the next heaviest, which is healthcare, you can see healthcare had a strong run up. So from here to here, it's a big run up. Can it pull back? Can it afford maybe forming another higher low? So this was a low, this is a higher low, and since the rally started from this level, we haven't seen any kind of decent pullback. Can it afford a pullback? Absolutely. If it pulls back a little bit, it's going to put some downward pressure on S&P 500. This is the second heaviest sector in SPY ETF. If you look at financial, this is the third. So this sector is beginning to look a little bit better, because they had they fell sharply. This financial fell sharply, but after the earnings came out, you can see that investors are beginning to move back into this sector. You can see RSI has moved back above the 50 level. MACD is moving higher. So I can see follow through, further move to the upside in this sector. And then if you look at XLC, this is basically communication. It's coming up towards the previous high. It hasn't kind of slowed down. Can it afford some kind of a pullback or slowdown? I think so. So if it slows down a little bit, it could put some downward pressure on S&P 500. If you look at, let's see, if you look at, this is materials. So this one also, going sideways a little bit, and I think this can continue. If you look at industrials, this is also going sideways. I think this can continue. If you look at XLP, this is the staples, strong run up, showing some weakness. Can it pull back a little bit? I think so. So, given the position of the S&P 500 sectors, it seems to me that there is an opportunity for S&P 500 and NASDAQ to kind of go sideways for a while. So that's basically how I see, especially ahead of earnings. Over the next 2 to 3 weeks, we're going to get a bunch of earnings. I'm not sure that the market investors wants to make a big bet ahead of those earnings. Also, in the early part of May, we have the next FOMC meeting. So ahead of all of this, not sure that market wants to make a significant move to the upside. So I do see an opportunity for trading within a range over the next couple of weeks time. So what are some of the levels we should be looking out for? So this is S&P 500. So S&P 500 traded between this level right here and this zone, and then it closed above this zone. So if you take this distance and project it upwards, I think the upside would be to 4,200. So that would be the upside. What are the support levels? Support level would be this one, which is around 40. This is what 40.67. So that would be the level I would watch on the downside. I also would watch the moving averages. Where is the moving average? The 20 moving average is around 40.64, which is exactly where this level is. So can S&P 500 pull back and test the 20 moving average? I think that would be entirely possible. I think it's possible, and I think that would not jeopardize anything. That would not jeopardize the technical pattern. So I definitely think that this is a level that is achievable. So I would look for this level on the downside and this level on the upside, and this is basically right in the middle. If you look at the NASDAQ, so what are the levels to watch out NASDAQ? You can see that for NASDAQ, you can see that this is the previous high. So that would be the resistance I'd be looking at. So That's around 13,215 or thereabouts. So that would be on the upside. And on the downside, I would be looking out for this level, which is around 12,850. You can see that was the previous breakout level right here. And then you also have the daily 20 EMA. So that this would be, I would say that it would be a fairly good support level, because you have the previous breakout level, you have the 20-day moving average. And I could see NASDAQ consolidating a little bit within this range. And I don't think this is necessarily a bad thing, goes sideways. I think that is very much possible until at least some of the key earnings are out of the way. If the market is going to make a move to the upside, then I think that's when that's likely to happen. On the other hand, if this level is breached, then maybe the 50-day moving average would be the next level to look out for, which would be 12,500. I'm not saying that NASDAQ is going to go to that level next week, but those would be the levels I would be watching out for. But I definitely see room for some consolidation both in S&P 500 and NASDAQ, as well as Dow, because of the fact that Dow has risen quite a bit. So I do see some pullback, especially in light of the fact that bond yields have moved up. I do see bond yields move up a little bit more. I see some strength, a little bit of strength in dollar. I'm not looking for a significant strength in dollar. Some strength, because dollar is oversold. So maybe there is the opportunity for dollar to rise a little bit. That basically means some weakness in gold, some weakness in euro. So that's basically how I see it. So that's basically how I see it. So I'd be a little bit. I'm not negative. I'm just looking for some sort of a pause, more like a sideways kind of a market, at least over the next week, week or so. I'll leave it here this week. You can follow me on Twitter, because I don't make these videos on a daily basis. So you can follow me on Twitter. I do provide update during market hours, you can see. So you can follow me there. Otherwise, I hope to see you again on a future video. If you haven't subscribed, please consider subscribing. Thank you very much for watching the video.